The markets have had a one-way rally. Do you think we are at the cusp of a correction? And if yes, how deep could the correction be?
Morning. The market has had a very strong rally, and there was no one in the beginning of the year who had talked about such a strong rally. So, the correction can set any time. So, I think it's possibly due for a bit of a consolidation. There are no two ways about it. It's been a one-way journey since the budget presentation, and maybe you can take a bit of a breather here, and then look for a reset of the rally post we are getting closer to both the earnings season and closer to GST implementation date. I think that will be the next triggers in the market. Of course, there is one more event in between, which is the election results of the state elections, and that could either be a bit of a dampener or could be a trigger for rally. So I think, but in the interim, I think the profit taking could set in a bit. But I don't see that as a big sharp decline from here.
Okay. Nevertheless, Reliance is still holding up the market. It's only a 1/4% downtick in the market, and the big reason for that is that Reliance is supporting the market even today. It's at up 3%. Yeah. So clearly that CLSA upgrade is something perhaps which is percolating to other brokerages as well.
16 points contribution from Reliance on the Nifty. It's down 18 points. So tells you the power. It's almost like one-man show right now.
Well, there is Hindalco, but it's not a big contributor. It's just that in terms of weight, in terms of a rise, it is rivaling Reliance with a 2.5%, 2.6% uptick. To be fair, Bharti Infratel, the other group companies of AB Birla are all doing well. Idea Cellular is doing well. So if it's a Reliance day, it's also an AB Birla day with 3 of the top 5 stocks in the green. Being of the AB Birla group, what am I saying? Hindalco and Idea are up. Bharti Infratel, the Bharti group stock. Grasim as well is higher, 1.5%. That's what I meant with the AB Birla dominating the 3 of the top 5 stocks this morning. Oh, Ultratech is the 6th. Okay, so good day. Good day for AB Birla. Yeah. But the index itself is minorly down and contributing to it are Infosys and ITC. Well, Nitin Jain, good morning. Thank you very much for joining us. Well, would you say, therefore, that this will also be just a minor dip? All dips have been bought by the market and this one as well will be?
I think it's very difficult to predict whether this will be a minor dip or could be slightly deeper. But I think, yes, there is a lot of money which is in the market, and the corporate results have been better than expectation thus far. And now, as you were saying, the entire old economy pack is firing. So there is, some momentum there in that segment of the market. So I think, yes, the market will look to get support in small dips also. I don't rule that out. So this is the new pack. The old economy is now the new driver of the market.
Okay. No, actually, there is a difference in the way in which support has come this time. It's come from domestic institutions. FIs have largely stayed out. They have had more lucrative opportunities abroad. What is your assessment of this domestic money that's coming? People are talking very bravely of an SIP fund, 4,000 crore every month. That's only growing. Yeah. So is this a different kind of rally where domestic money, because of the way in which real estate and gold and interest rates are, is going to be a secular support for this market?
Yeah, I think whatever points that you said clearly will play out. And also don't forget that in the last decade or so, the financial services industry in India has deepened quite massively. You look at the private bank network rollout. In the last decade, all of these banks have expanded their footprint by between 5 and 8x or even 10x. And all of these guys have been hungry for other income, the fee-based income. So a lot of these guys will see the tailwind of the macro favoring investors to get into equity or insurance. So I think you combine the interest rate decline in the system, you combine the financial savings improvement in the system, plus the footprint of all these banks which have expanded so massively in the last few years. You clearly see that at least you would see a steady flow of money coming into the equity market. So I think that will be a continuous support. And add to that the buybacks, the higher dividend payouts. So there is a lot of return on capital that is also seen after a very, very long time. Then we are talking about potential M&As in the market that could release further capital back in the market. So you are talking about continuous equity support from domestic investors plus higher dividend, higher buybacks. The foreign investor is still a bit absent from the market, but I can see that foreign investors may not be away from the market for a pretty long period of time.
Okay. Nitin, you said about old economy stocks. The oldest of them is leading the market right now, Reliance. But of course, with the help of its new economy business, what's your call on the stock now? At fresh 52-week high, but still a multi-year underperformer. At current levels, is it a buy?
So don't comment on stock specifics, but yeah, I think the old economy is showing a change by getting into newer businesses. So clearly there will be some hypothesis which will build in what we are hearing about the new ventures and profitability of the same. So it could be supported well because the market is looking at this as a big change of return on capital from where they were seeing maybe just a week back. So I think there is a big shift in market's perception on return on capital on new investments. So I think that stock could remain in limelight for a while. But it's done a fair bit in the last 2 weeks. So I think there could be a bit of a breather. But as you said today, there doesn't seem to be any breather. It is still firing up.
Good. Okay. The broad financial services space, you spoke about the private banks. Will that be your space of choice? Or will NBFCs overtake them? Do PSUs have any place?
NBFCs are doing their own bit. So NBFCs have become very large in the last few years. I was, on the last session on CNBC, I mentioned that possibly in the post-demonetization era, NBFCs may lose out a bit of an edge that they used to have because everyone will have a banking account. Supposedly, everyone will have access to financial services. So the arbitrage of availability or reach that NBFCs were playing will possibly no longer be there as deep as it used to be. PSU banks, of course, they have their own challenges on asset quality. It will be good to see if they can resolve that asset quality issue faster than later. And if they were to see that change, I think there is value in that space. Though I don't see immediate resolution there happening. So we are still sticking to private banks as a preferred play in our portfolios.
Okay. Any thoughts on autos, Nitin? Here, of course, it's very stock specific, but we've seen a couple of stocks go back to the previous highs, and at least in a couple of companies, the demonetization impact has not been there. Though last month's sales did show some bit of impact in a couple of companies. How are you placed on this one?
I think the auto story is still very powerful. Going by the macro penetration story, there's still a big room for growth in these segments. Also, let's not forget the pay commission related driver of auto segment will stay for the year. The rural economy, which was stressed, will show back. The GDP data showed that there was a good growth in the agri output. We are expecting reasonable growth in the rural sector this year. So all of that will play up. So the lagged impact of the demonetization may see some bit of numbers being a bit volatile in the short term. But let's not forget that the pay commission related and the rural economy related uptick will happen in the auto industry. To add, you can also add the lower interest rate, which will help the sector to a certain extent. I think those triggers still remain in play. So we also like the auto ancillary space. Clearly, that space, the replacement market, is a very interesting market. And if in a post-GST regime, there is some favorable tax regime which comes in play, the auto ancillary space may also look very attractive.